Hey guys, what is going on? Welcome to the video. So in this video, I'm going to be going through 5 stocks I'm looking to be playing this upcoming week and weeks to come. We're also going to be going through the 3 stocks from last week, how they performed, and the updated thesis on that. So without further ado, let's go ahead and get into the video. So the first stock from last week was Nano-X Imaging, ticker symbol NNOX. This stock had a pretty solid week, going from about $44 per share and closed at $48 per share, and also had a run up to the mid-50s earlier in the week. So how this trade is going to play out is purely based on the upcoming FDA catalyst. When we get that FDA approval date, that's when we should start seeing the run up. I think we see a run up, like I've been saying, up to the $60 to $80 plus range, leading up to that FDA catalyst. So right now we're just waiting on news of when the FDA approval date will be, and then we can see the big move from there. And until then, we're likely to just keep getting consolidation in this stock. So next up, we talked about Molson Coors Beverage Company, ticker symbol TAP. This one had a very solid week as well, up about 6%. It's breaking over that key level at $48. Once we start testing and break out of that $50 level, that's when we can see the next leg up on this stock. And on Friday, we got a bunch of analyst downgrades in this stock. And this looks like pure manipulation in my opinion. So we got multiple analysts downgrading this stock, setting their price targets in the low 40s on Friday, which should not mean anything. In my opinion, what happened here is these big institutions told their analysts to downgrade the stock so they could be accumulating this. As we see looking at the Friday chart, we got that early dip, and then throughout the day, this actually closed green, even after all those analyst downgrades and no positive news to send this up. It looks like these analysts downgraded the stock so their institutions could be buying up this stock and buying the cheap shares on this slight dip. And zooming out, taking a look at the 3-year chart, we can see this is starting to break out of the cup and handle formation. The full breakout is going to happen over 50 and then over 60. And overall, my price target is overall $60 plus. And I could see this going up to $80 by the end of the year. As a longer term swing trade, I am in longer term options on this stock still. Alright, and then the last one we talked about last week was Argo blockchain, ticker symbol ARBKF. This is one that just still consolidated throughout the week. It's still in the bull pennant pattern, and this is getting to decision time whether it makes a big move up or a big move down. So this is a stock that I'm still in. I have a tight stop loss if it was to break down, and if it does break out, I'm targeting $5 per share if that breakout does play out. Alright, so let's go ahead and get into the 5 stocks that I'm looking at this coming week and weeks to come. Let's get into it. Alright, so the first stock I'm looking to play this upcoming week as a longer term swing trade is Macerich, ticker symbol MAC. So the chart that we're looking at here is a 3-year chart zoomed out. So as you can see, this stock has had a very small recovery compared to a lot of these other recovery stocks. We can take a look at 3-year charts on other plays just like this. And this is a REIT based on a lot of malls and retail stores. So taking a look at companies that do the exact same thing. First off, Tanger Factory Outlet Centers, ticker symbol SKT, a REIT, almost the same exact business model. We can just take a look at the 3-year chart and you can see this stock has recovered so much more than MAC. And also taking a look at the largest company overall with malls and REITs, Simon Property Group, ticker symbol SPG. You can see that this stock has almost recovered all the way since COVID. And just taking a look back at the MAC chart, we can see this stock is currently sitting at $13 per share when it was sitting at about $25 plus before the pandemic happened. So this stock has a lot more recovery potential, and I do think it's being overlooked compared to these other mall REITs such as SKT and SPG. So this trade is likely going to take multiple months to start playing out and see more recovery potential, but I do think it is a very low risk, high reward, and also very heavily shorted stock. So when it gets going and gets attention, I think the stock's going to be moving pretty fast towards that full recovery like we're seeing from these other mall retailers. Alright, so the next stock I'm going to be talking about is Chargepoint, ticker symbol CHPT. So this is a post-SPAC merger. It had highs of $49.50 and now sitting down over 50%, sitting about $23.50. So just taking a look at the technical setup, I do believe that this is bound to consolidate for a while between those $25 and $20, both key levels, until one of those breaks. So if it breaks out above $25, I think we could see it move up to $30 pretty quickly. But until then, I do think it's likely to keep consolidating. So Chargepoint is the largest EV charging brand. Compared to companies like Blink and others, this stock is grossly undervalued. Just taking a look at the multiples, the financials, the growth potential. They already own such a large percent of that total addressable market, the largest EV charging company. And in my opinion, in the future, EV charging is going to be one of the best industries to be investing in. Just think about it. In the future, 10 years down the line, we're not going to have gas stations like we do now. They're all going to be replaced by EV charging stations. And having and investing in that largest company, which you can think of like an ExxonMobil, that's going to be the future of ChargePoint. Investing in that in the future of sustainable energy. None of these gas stations are going to be here. It's all going to be EV charging. So ChargePoint has a ton of room to grow. Whenever society shifts more towards EVs, every year that passes, we're going to be seeing more and more EVs until like 90% of vehicles are going to be EVs in the future. Chargepoint is going to have this majority of the percentage of the total addressable market compared to other competitors. They're going to be the leader in the space, and that's the space you want to be in. As of right now, I believe that Chargepoint is an absolute steal to be buying at these prices for the long term. This is not any trade. This is a long-term play for me. I'm not looking to sell anytime soon. And in the future, this can be a $100 plus stock years down the line, in my opinion. So this is one of my favorite investments to be making right now in the future of EVs and EV charging. Chargepoint is the way to go, in my personal opinion. The reason that Chargepoint has been falling so much recently is there was recently a lockup. So what this means is there was 18 million shares released, being able to be selling by the people who were investing or have shared in this company before it went public. So 18 million shares got freed up. A lot of people taking profits on their initial investment, and that has held the stock down recently. But once we see the stock back over $25, I think this thing goes on a big run very, very soon. Alright, so the next stocks I'm going to be talking about are 3 space companies in that space sector space that are going to have that ARK catalyst to play off of when ARK does start releasing their space ETF, which is able to be released as soon as the end of March. So while waiting on that, I think it's very smart to be accumulating these space plays, because once that does come out, there's going to be people flooding money into that arkx fund. And what's that going to do with the holdings that are in that arkx fund? That's going to shoot them up. So these are 3 companies that I believe have a very good chance of being in this arkx fund, and will get that boost, get that initial pump, and then also are very low risk at these current prices. So let's take a look at the first one. So this first one is a SPAC, Holicity, ticker symbol HOL, and this can be the merger with Astra, which is a space launch vehicle company. It has over 10 launch sites globally. They won a NASA contract, developed a mass-produced portable launch system, and this SPAC merger is expected to complete in the second quarter of 2021, which is going to be anytime between April and June. And overall, they have some big investors already in this company, and this space sector is untapped and is going to be very, very hyped once this ARK ETF does come out. So taking a look at the technical setup on this play, this is in a falling wedge formation. Once we do break out of this resistance trend line that it's sitting at right now, once we break out of that, I think it's very likely to go back on a run up to $15 plus very, very quickly. So watching for that. This is a great short-term setup and that great mid-term setup. Whenever that new ETF comes out, this is likely to get a ton of hype. It's likely to go on a pre-anticipatory run, and things are looking very good for this setup and the company overall with the upcoming catalysts. And it's a low-risk play. It's sitting at $12.82. Absolute worst case scenario, if anything horrible happens, this stock will go down to $10 worst case scenario, and has upside getting back to that $20 plus level when it was sitting at highs. So amazing risk reward for this play. So alright, so the next stock I'm going to be talking about, another one of these space plays. I've given my full thesis on this in a past video. This is Osprey Tech Acquisition, ticker symbol SFTW, and this can be the SPAC merger with Blacksky. Now I gave my full thesis in a past video on this one, and right here the risk reward just cannot get much better. Just taking a look at the overall price, $10.54. So overall, worst case scenario, if something horrible happens, this stock will go down to $10 per share. And this stock has easy upside in my opinion, going back up to $15 plus, which would be almost a 50% plus gain from where it's at right now. It's likely to be in the arkx ETF. It has a ton of business model behind this company between space satellites and data collection, a bunch of others as well, and pretty much no risk. So I'm loving SFTW at this current price. Alright, so the last stock I'm going to be talking about in this video is the SPAC Atlas Crest Investment Corp, ticker symbol ACIC, and this can be the merger with Archer. Now like SFTW, this is a SPAC in the 10s, very, very low downside. Once again, worst case scenario, the stock goes to $10, so very low downside. It's bouncing off support here. ARK does have an investment already with them in the past, so this is one that is very, very likely to be included in that new ARK fund when it does come out. So what this company does is their focus is on air taxis. So think of it like an Uber, but in the air. More expensive, but it gets you those places faster. They're electric vehicles, and I do believe there is going to be a market in this in the future. Their timeline is pretty long. They do expect a full rollout in 2025 to have this full service running, but there is going to be a market for this for sure, in my personal opinion. So there is a lot of competition in this space overall, and it's going to be tough to get that full market share, but Archer has a pretty good chance overall. They have key partnerships and contracted order books from United Airlines. Their vehicles are one of the quickest out of the competitors. They're going to have 4 passengers per vehicle. The negative thing with this one is it's not going to be autonomous. Whether that's going to be a good or bad thing, it is going to be easier to get this full rollout going compared to some of these that are going to be autonomous. There could be a lot of fear in a longer rollout to get those autonomous drones being able to be 100% safe before a full rollout. It probably is going to be good that Archer is going to have piloted on these vehicles. But overall, I have not personally decided whether this can be a longer term investment for me, or it's just going to be that shorter / mid-term swing trade leading up to this ARK catalyst. But in my opinion, this is going to be one of the most likely companies to be in that ARK ETF because they do already have an investment with them. So very likely to be in that ETF and very likely to get hyped very soon with that such little risk and great reward potential, with a chance to get back to those highs at $18 plus, which would be an 80% move from where it's at currently. Alright, so those are 5 stocks I'm looking to start playing this week. A lot of these are mid/longer term swing trades, so they are going to take patience. Some of these may not be moving immediately, they are likely to stay pretty stagnant. But when the catalysts do play out, when this full recovery does play out for others, I do think we are going to see very big moves, and it's very low risk where it's at right now. So no matter what happens in the market, these are all pretty safe investments in my personal opinion. Always do your own research, do your own due diligence. Make sure to have your own thesis going into any of these trades. But hope you all enjoyed. Like and subscribe if you haven't already. If you're interested in joining the private Discord chat, the link is down below. Every time I buy and sell a stock, I send an alert to the group. You have full access to my portfolios, short-term and long-term portfolios. I answer any questions you have and send out nightly watch lists for plays I'm looking to play the next day. Also, if you're interested in signing up for BlockFi, I have a link down below that can get you up to $250 in free Bitcoin depending on how much you deposit. When signing up, I've personally been using this as my full savings account, getting that 8.6% interest on stablecoin. You cannot beat that. I've only been using this for about a couple of weeks and have had great accrued interest already. So if you're interested in that, the link is down below as well. If you're interested in joining the course, finding out all my trading strategies, that should be the link in the description as well. And hope you guys enjoyed the video. Thanks for watching, and let's get rich.